Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Hello, thank you for joining today's episode of the Risk Intel podcast. I am thrilled to have Niki White back with me. For those of you who have not met Niki yet, Niki is a former Chief Risk Officer, auditor, and currently the Chief Growth Officer at SRA Watchtower. Niki, thanks for being with us today.
Thanks, Ed. I'm excited about this topic.
Niki, we've got a couple of things to talk about in this episode and the next one, really all around this concept of strategies for cultivating a culture of risk, right? And today we'll start by discussing what it means to establish a culture of risk and why that culture can be more than simply the land of no, as it has historically often been seen. And then in our second episode, subsequent episode, we'll explore the impact of cultivating a culture of risk on the dimensions of an institution's efficiency, strategy, and ultimately shareholder value, which are key measures of success. Let's begin with the first topic, though, here today, of what it means to establish a culture of risk. And I'd like to begin with an example of different risk cultures. So we'll perhaps deviate from the traditional path here and take a trip out to charming rural Montpelier, Virginia, a stone's throw from Richmond, and home to the White family's kitchen table, which is a wonderful parallel universe to the boardrooms, risk team meetings, and first-line colleagues who are considering risk as they enact operational decisions. So with that as the backdrop, Niki, why don't you take it from there and take us through your this parallel universe here?
So, in addition to the titles that Ed has shared that I've historically held, I also hold the title of mom. I am the mother of two boys. They're wonderful human beings. My oldest son is approaching 19 years old and is a freshman in college. And my younger son just had his 16th birthday. And this summer, they've decided to teach mom something new. And they're teaching me how to play chess. I've never played. I'm really not good at it. But I'm getting better. And this is what we do every single night at our dinner table. And we have a marble chess set that my husband and I bought 22 years ago, coming up here on our 22-year wedding anniversary. And we bought it on our honeymoon. So it sits in the middle of our kitchen table now permanently, and we play every night at dinner. It has been fascinating to me, as those of you who happen to have children and happen to have multiple children might see, is that they have very different approaches to their strategy. And it's been interesting to watch them mature and grow as individuals. But playing chess, as I was preparing for this podcast, I was thinking about how they approached, basically knocking me completely off the board, which they do every single night. I have yet to win, but maybe someday it'll happen. So my older son protects his valuable pieces at all costs. He will move all over the board. He has, he aligns all of his pieces, and there are key pieces that he will not lose. And he gets very unhappy if he does happen to lose them, but it's few and far between, as opposed to my other son, who very much takes a focus, divide, and conquer. He will lose anything if he means that he can clear out an entire section of the board and that he can really focus. So he is just completely destroy the whole world. He wants as few pieces in his way as possible, and will do whatever he has to get those. And I really think about that from a risk perspective. And as we think about the risk culture at your institution, do you have a lot of pieces on the board? Are they all over the place? Are you, clouding the picture with all of these pieces that are moving, maybe in alignment with a strategy? Does everyone know what your strategy is? Can people pick up on it because there's clutter all around? My older son's strategy, he's distracting me from trying to take his key pieces, as opposed to my other son that says, I need clear line of sight. I need to have all of the field level and playing field, and I'm focused over here on this target, and I'm going to go get this one target.
So Niki, that is, I mean, it's fascinating, right? That those are two, diametrically opposed, right, viewpoints. And I think that the parallel to the risk culture of an organization is a really interesting one, because it reinforces that people are approaching this from different perspectives, and that left to its own devices, an organization may go in multiple directions, or a direction that's not intended. So there's a number of attributes, if you will, that as a leader or as an organization that you can influence and impact, that drive culture, to ensure that there is alignment, and that you are all pointed the same direction. So, right, maybe take us through some of those drivers that form and influence a risk culture inside a financial institution.
Well, and I'll continue to draw this parallel to the chessboard. So, the tone at the top. What are you communicating, either verbally or non-verbally? My younger son says, "This is how I'm going to attack you, so you better be prepared." And I clearly knew where he was coming from. I clearly knew how I could best evaluate my approach to trying to get that king, which I still haven't done. I'm going to keep telling you, I still haven't won, but someday we will record a podcast and I will tell you that I beat my children at chess. But as opposed to my older son, who has multiple small strategies. So like, this piece has a strategy, and this piece has a strategy, and this piece has a strategy. His is less cohesive. His is a little bit more chaotic. And when you think about that within the four walls of your institution, how often do you have a very clear strategy that is communicated from the top, that all of the pieces underneath are aligned, who's a knight, who's a rook, and who's a pawn, where are your valuable players, and which ones can you afford to move around, which ones can you afford to take some risk, and which ones can you really not play without?
All right, tone from the top, right? Communication, clarity of purpose, clear messaging, a very powerful, impactful driver that forms and influences risk culture. What else?
Well, and thinking too about the opposite tone at the top piece is, if the strategy is not clear from the top, and each individual department has their own strategy, are they actually aligned? And that kind of leads into accountability. So when you have a tone at the top that is not providing one clear direction, one clear goal, and everyone is working towards those, how does accountability come into play? If you have a goal and your goal is competing or conflicting with someone else's goal, do you know? Are you working towards different objectives? And what is the risk to the strategies that you're trying to employ? Are you going to get there?
All right, you've got now clarity. You've got, and because there's clarity, it's easier to achieve accountability and alignment there. But does that mean that everyone is just a yes person? Should they do it? Do they just all need to fall into line at that point?
Are they just a pawn in the game, you mean?
Are they a pawn?
No, you need to have a system of effective challenge. And so when you have that clear strategy, and you have the accountability of the various departments, from credit, and from liquidity, and from operational, and from compliance, like, think about all of those different factors, and we'll get into this a little bit more in our second episode. But do you have that effective challenge? If you have your chief credit officer coming to you and saying, "I'm going to experience larger than expected charge-offs," what is the impact on liquidity? Were you planning on getting those cash flows in from those loan repayments? And so therefore there's a liquidity impact as well as a credit impact, and ultimately an earnings impact. So what is that effective challenge? Those are three key departments. You've got the CEO, you've got the chief credit officer, and you've got the CFO, or whatever function is sometimes it's treasury that's handling liquidity. Are they challenging each other? Are they collaborating together? And kind of pivoting into the fourth point, which I'll kind of front run you a little bit on that. Thinking about the incentives. Are those incentives aligned to bring on, if your goal is loan growth, so everyone is focusing on growing loans. Well, you can grow loans all day long, but if you put garbage on your balance sheet, that's not going to ultimately affect the overall strategy, most likely because you're looking at earnings and returning shareholder value. But how are you incentivizing that behavior? Are you incentivizing risky loan growth? Are you incentivizing loan growth that is going to result in losses? And what is the liquidity impact on those? I keep using loan growth, but it's a good theme to thread through.
Yeah. And let's actually take that incentive concept one step further, because no question that incentives and rewards drive behavior. But the other element to that is you have to be aware of the impact of your actions. And so there's I think another concept here of risk awareness and helping colleagues appreciate and acknowledge that and factor that into their decision making as part of the culture.
Absolutely. And I'll bring that back to that tone at the top. And so if the tone at the top is that risk is not the land of no, the risk officer is not kept out of the conversations, and the risk officer is allowed to permeate the organization, to spread that education, to involve the retail operations, from an example, from a credit operations as an example. They're all in a risk-based role. Everyone in the bank is a risk manager, and that level of education, of awareness, of when I walk into work today, how is my behavior, how are my actions ultimately affecting the risk profile of the institution? If I make this transaction happen, what happens to the organization? That level of risk awareness and developing that maturity really comes from the top, and aligns to all of the other 4 factors that we talked about.
All right, let's pick up on this final theme of the land of no. You mentioned it there. We talked about the fact that culture is really not born or perpetuated by any individual, right? It's an organizational characteristic, and it requires purpose, intent, and conviction, certainly starting with the tone from the top, no question, and permeating with many of the other drivers and attributes you mentioned, right? Through the willingness to challenge and embracing challenge and putting the right reward systems in place. All that said, though, risk and audit leaders in particular are front and center in modeling the culture of risk of an organization. And historically, right, and I know I'm dating myself with this comment, but historically, these leaders were often seen as the land of no, right, to use that phrase. So expand upon that a little bit. What does the land of no mean, and how can these leaders begin to change both the perception and the reality of this characterization?
I love this question. I love this topic of conversation, because I lived it. The organization the bank that I joined was a land of no, and did not have a strong risk culture. They had a strategy. They were working on executing it, but it really was not a cohesive and efficient process. People had conflicting goals. So really the land of no, I was not invited to conversations. My door was there were often closed doors, and I was on the wrong side of them, or on the other side of them than I wanted to be, right or wrong.
Yeah, right.
And so what I found was leading with that inquisitive nature. It's a change in culture. It's a change in industry. And when someone comes into the risk space with a background in audit, or as an examiner, or from a regulatory perspective, people are afraid to get in trouble, right? No one likes to be in trouble. But when risk really comes to the table and says, what can I do to help? What are you trying to accomplish? Let's talk about the risks that could inhibit your ability to execute on your goals. What can I do to help you in this space? And I'm really starting to see in the conversations that we're having with our prospects and with our clients, and even in conferences. I was at a conference recently where we were talking about this risk permeation. What is the background of that chief risk officer? Did they come from credit? Did they come from finance? Did they come from IT? Everyone brings their view of risk, and they're viewing risk through the lens of their past history and their past experience. We're starting to see that really broad cohesion of being able to be more broad, of being able to view risk through these different lenses, regardless of the background. And that's starting to break down that land of no, to say, okay, credit person, what do you need? How can I help you establish your strategy, to execute on your strategy? I heard this thing over here. This is coming out of the woodwork that may impact that. Let's go over here and talk to that person. And that's how you build a culture, is when it's not just a siloed conversation. It's not just, this is my goal, this is what I'm working on. It is looked at across the various pillars or silos or whatever it is that you want to call it, whatever it is, to break down those walls to make it one conversation, one tone at the top, one culture, and bring everything together.
You talked about risk or audit leaders feeling like they're an outsider, they're not part of the team, they're the wrong side of the door, right? They don't have a seat at the table. Um, you know, and the fact that you tackle that certainly with organizational culture, by also bringing more skills to the table when you come into that risk, into that risk or audit function, leading with an inquisitive nature. I love that phrase there. Tyler Pill from Service Credit Union was on one of our previous episodes, and he talked about the risk officer really being a team of value add, right? And someone that is helping operational and strategic and compliance and audit, right, decisions to be made. But it's not a check the box exercise, right? Because then no one wants to open that door and have you the other side. No one wants you to be part of the team. No one wants you to be an insider. No one wants to get you that seat at the table. And so I think that fundamentally, if the risk function can bring value to the table, that's a great door opener. And then once you get to the table, if you are not the land of no, if you are asking the thoughtful questions and you're able to tie back risk and strategy, two sides of the same coin, we've talked about that before, you get to the point where you're adding value, you're helping the organization to move forward rather than simply being an impediment, and being the land of no. Niki, lots of great insights here. In particular, right, laying out some of the drivers there that form and influence the culture, a risk culture, right? The tone at the top, accountability, effective challenge, incentives, and risk awareness are all important attributes for people to think about. In our next conversation, let's build on this and let's explore the impact of cultivating a culture risk on the downstream pieces and institutions' efficiency, strategy, and shareholder value. So for today, thank you very much. Appreciate the insights and look forward to having you back for the next part of the conversation.
Thanks, Ed.